You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, Quasar Markets Live. I am talking about the day. Peter Navarro already saying this morning that, Apple feels like they're just too big to fail. We can tariff them if we need to. I did not like those comments this morning. Look, sometimes you got to be a little bit more prepared. Now, he did say, the trade rep now saying that, look, these letters that are going out are letters of negotiation, that companies know, that the markets know that they're letters of negotiation. Not really. I'm sorry, Peter. That is not how the world works. When you send out letters as administration, as an official thing, the world taking that kind of serious. So you need to understand that when you send those letters out, that this is a hard stop here on a lot of things. Now, the president has moved once again, the goalpost of when those tariffs will happen. He's now saying no negotiation after this next one, which is going to be, he's saying now August the 1st is the end of it. So markets are not liking this too much. The response now has been a little bit negative here. S&P now fair value down 2.48, implied S&P open up 16 points. So we'll see if that catch up from last night is happening. But right now, I am not quite liking this answer here so far. We're now seeing that, he goes on to say that markets understand trade letters are negotiations. When you're talking to countries, and look, I have been in this position. I know. I'll post this for everybody there. Markets understand trade letters are negotiations. When you're looking at this, you're playing with the lives of many millions of Americans, as well as these companies that are trying to make money off of them. So when I look at it from a forward perspective of what the money goes to R&D, so we talked about this yesterday, right? R&D budgets. We talked about it in the fact of the margins on these companies. A lot of times when I see those margins, I have to see, is it being eaten into on two ways, right? That's the transport of it, and of course the tariffs. Who's paying the tariffs? And guess who pays the tariffs? It's not the companies. They pass that right on to us as people, the consumer itself. And because of that, that keeps inflation high, and that keeps the Fed in place right now, saying, look, we understand that, so we're going to have to keep our rates high. I made a post earlier this morning about housing numbers. People are tired of waiting for these rates to come down, so they're just taking their houses off the markets and sitting in their houses for a while. So we have a little bit of a 2008 brewing, not quite there yet. I don't expect it to happen. I expect this administration to move quicker than that. The administration Trump specifically has said he is looking to let go of the Fed chair. If that happens, expect some volatility in the market. Now, we talked about it yesterday with Scott Bowers saying, the old adage of him is you buy volatility, the VIX, when you can, not when you have to. And he's saying, and he showed us yesterday, and I think I also moved it to as well, the forward curve, the contango, meaning that in the future we're seeing the VIX higher than we were back during COVID. You saw the VIX, what's they call backwardation in the forward curve of the VIX was going down. So they are expecting a negative fourth quarter. We've seen including Stifel saying a negative fourth quarter too. So all of those things are adding up to not a good positive place for me. So when I'm looking at the markets in general, I'm thinking about this as a trader, but also as an investor. We trade daily, but for me right now, it's all about the future. And right now, the future is not looking as bright as it was. Ladies and gentlemen, welcome into the show. And I'll bring him in now, Kevin Koharki. How are you, Kevin?
Very good, Steve. How you doing? Thanks for having me on.
Yeah, man. Look, welcome to the morning show. It's a little bit different than the average interview that we do, right? We do the morning show. And Kevin, let's get right to it. I'm going to put a little bit about yourself down at the bottom. So the scrolling is going on now. But Kevin, tell us a little bit about yourself, CAE Investment Advisory, and who you are a little bit.
Yeah, no, so I started out as a mergers and acquisitions analyst 20 some odd years ago, and then became an academic. Technically, I'm an accounting professor, but I teach all financial statement analysis. And a couple of years ago, fell into consulting with companies and just sort of developing their employees' financial acumen. And over time, my students and my clients have said, you are really fun to watch, talk about companies and analyze companies and this and that. Have you ever thought about training people on how you actually do a lot of that work? And it's been something that's been in the back of my mind for a couple of years. But over the last year, I've actually put the time in to develop a website and start developing a subscription where I'm doing deep dives on companies and just showing people how I analyze companies and things like that. The genesis for it is most investment newsletters, they give you a very high level overview of companies that they recommend, and they leave all the deep dive analysis for the subscriber or the investor. And I found that a lot of people either don't do that work or simply don't know how to do that work. So I created CAE Investment Advisory to essentially help with that and show people how to do the proper analysis and just look at various investment situations. So we like to say that we are dedicated to maximizing your investor potential, if you will. And so it is a much deeper dive than you're going to get at most investment newsletters of that nature.
Yeah, and I'm gonna put everybody out there that this is his website, so you guys can click on it. All right, so let's talk about this morning. Peter Navarro coming out this morning saying that everybody understands that these letters going out to these countries are negotiation, right? And one of the interesting, and especially with you, Kevin, especially with what you're doing, he said something very interesting about Apple, saying that Apple is a company, quite frankly, is not too big to fail, and that they're not immune to these tariffs. Does that affect your when you look at a company, the way that you do your deep dives? These kind of things, these news articles around it, these trade advisors, the president himself, do those things affect your advisory to companies?
A little bit, yeah. So I actually have a couple of clients, large ones. I mean, we're talking Fortune 100s, where they said, look, as part of our training programs, we want to institute how some of these potential tariffs could impact how we're going to have to operate going forward. So it is definitely something when I'm working with companies that I take into account through my investment advisory. Same thing, because depending on how long these things can last or how severe they could be very significant. Which is, one of the ways you quote unquote hedge against that, right? Is you stick with companies in the U.S. that only deal with U.S. customers, and then tariffs aren't necessarily a concern. But even then, their customers might be impacted by it. So it's one of these situations where it's hard to avoid it, even if you want to.
Yeah, good morning, Ron. Any questions out there or any companies you want to throw at Kevin? He's here to answer those questions. Kevin, you are the advisor to several Fortune 100 companies, and they do call you on a daily basis. And I have to ask, I'm also the Bank of Atlanta's advisory council there too as well, and they asked us questions about what's the feeling out there? What is the pertinent feeling right now amongst those CEOs and those as a business advisors that you are? What are you seeing out there? What's on the forefront? About 3 weeks ago, I was at the CNBC event up in New York, and I heard Dan Ives talking about it, and Dan Niles both, that coming up in the fourth quarter does not look good. The markets do not look good at all. We're hearing that again from Stifel yesterday, saying they expect a 12% pullback in the fourth quarter. Are you seeing that with companies as well?
Yeah, it's a mixed bag. I mean, some of them actually are starting to open up the purse strings a little bit, but not many. There's several, and those are the ones that are kind of in the defense space. So I think that they know that there's not going to be world peace anytime soon.
Right.
And then there's a bunch of other companies where, yeah, I would say the vast majority of them, they are nervous. People do not really know where things are going to go, particularly in Q4, and they've been kind of waiting on this. At least in the first half of 25, they said, things were okay-ish for the most part, but they knew that the impact of the tariffs that came out, in April or whatever it was going to start to roll through the economic data and start to have an impact. And I think they're starting to see that.
Yeah. When you talk about the big companies, I mean, the big one today to me is Amazon with Prime Day. $25 billion is what the expectation is for the numbers. We talked about it yesterday with Scott Bauer that, Amazon wasn't the first company to do that, right? It started with Alibaba with Singles Day, and they moved it now forward to Amazon saying we're going to have a Prime Day ourselves, and then it became 2 days of Prime Day, and then of course now it feels like I live in Prime Day every day now. The last week, I actually bought some bookshelves, which I didn't think I was going to, but is the normal consumer, are they wearing out a little bit? Are they getting tired of all of this? You're hearing it from the corporate side on the higher level, but is there some kind of fatigue going on in the markets right now?
Yeah, so I can't tell you the name of the client, but it's one of the top 5 banks in the country. So you can take a guess as to what realm we're talking about. And I was with them a couple weeks ago, and I asked them how they were viewing just sort of the consumer, because I didn't see that big of an uptick in their credit card default rates, which is one of the first things that I look for.
Yeah.
But they said, where we are seeing it is at the lower income level. So you're not seeing it with, your higher net worth or even just average net worth customers, but you're starting to see it at the lower ends. That's where they're starting to see a lot of uptick in credit card default rates, things like that. And it seems like a lot of the money that they might have had in their accounts has been spent. It's just when you look at averages from the Federal Reserve Bank or whatever, they'll say, oh no, the consumers are still flush with cash. It's like, yeah, but the distribution's a little bit off because the people who always had cash didn't spend any of the COVID relief that they got. So it's still sitting in their accounts.
Right.
But on those lower ends, those numbers have been depleted, and you're starting to see it in auto loan defaults, credit card defaults. It just depends on what end of the spectrum you're looking at. And on the lower household income side, you're definitely, I think, starting to see the signs of stress.
Yeah, and I mean, when you think about it, and I just played a post about this morning with the lower income, a lot of my people around me that have been talking about it are looking to move. They want to move their homes, and housing issues have been pretty big lately. And I made a post about it, this morning also about the housing market, but people are giving up on trying to sell their home, especially when they're having these issues with credit cards, issues with, hey, I get a free mortgage reevaluation on my home that I bought during COVID. I'm trying to refinance. I'm just giving up. I'm done with it. I don't know what to do right now. Is that also seeping into it as well?
I think so. Yeah. It's funny you mentioned that. So I'm a little behind in my reading. Last night I was reading Barron's magazine from the week before, not this week's edition, but the week before. And they were talking about just sort of home sales and how they're not certainly nowhere near record high levels. And then of course you have home construction, which they were saying needs to be at about 5 million units a year and whatnot. And we've been below that for a while. And prices are still high, thanks to one, COVID, two, over a decade's worth of just low build out. And two, we've seen the interest rates go up to 6-7%. And home prices haven't adjusted. So you have people like myself with a 3% mortgage who, at this point, I'm not selling,
right?
Because I don't want to have to trade in for a 6 or 7% mortgage. And then, of course, you have new buyers that just might not have the cash available for a sizable down payment. So it is definitely been straining the real estate market, and you're starting to see it even in some of the home builders. They are, with the exception of the usual suspects, as I call them, the big boys and girls in that space, they're having a real tough time.
Yeah, the DR Hortons and the Pulte Groups and the Toll Brothers. So, when you ask that question, I have to ask politically too. I'm not gonna get too deep into it, but these home builders do use a lot of migrant employees to build homes. Are they also having a double whammy here against them?
I mean, if not knowing the full statistics on it,
Okay.
but let's assume that what you're saying is correct, and I have no reason to suspect it's not. I don't see how it doesn't impact them, because it's like a lot of industries. It's just very hard to find labor. And so the Wall Street Journal has reported on this to some degree recently that, recent immigration reform is certainly going to impact certain industries. And I think you're right. Home building would be one of them that would come to top of mind in this case. So I think labor problem or shortages would also be a problem here.
Yeah, you talk about labor shortages, but yet Microsoft lays off 9,000 employees because of AI. Is AI also going to add to that problem too?
Man, I'll tell you, this is the $1 million question, so to speak. So, as an accounting professor, we've been, especially in accounting, we've been working on this problem for years, and I can only tell you what the major accounting firms have told us, which is it's going to basically take the robot out of the human. So, as an example, an entry-level auditor used to read through lease agreements just to pull out covenants and stuff like that. Well, now a computer does it.
Right.
But what the AI is allowing some of those firms to do is offer services to their clients they've never been able to offer before.
Right.
And so their revenue is still growing. And so they're just reallocating the people. So to me, this really depends on industry. And we were worried about this 5, 6, 7 years ago. We have not seen this come through on like public accounting firms and even some of the consulting firms. But then, you make a good point where you see Microsoft lay off 9,000 people. The CEO of Ford recently said that, like half of white collar jobs could go away in the next 5 years, all that. And so it's this very odd moving target. What I always worry about with these things is, I mean, you're like me, you're old enough to remember this. There was a lot of stuff that the internet was supposed to do as well, and we're still waiting for it. So,
I want a flying car, right? I mean, I totally get that,
Yeah.
But I will say, Kevin, that I have personally been saying that accounting as we know it is dead, right? That you don't just go to your new accountant, the junior accountant on the board who just got their degree from college. Those days are over. But I am saying that the management style of over those AIs, it'll make them more efficient, right? Is this the mom and pop days of these small accounting firms? Are they done?
I don't think so. And the reason for that is, so I agree with you that a lot of the basic bookkeeping that was always done, just the journal entries, that's automated, or if it's not, it will be. But the other problem, and again, talking to some of the larger clients, when you look at the investment that companies like Microsoft, Oracle, and whatnot is making in AI, it is nowhere near ready to be deployed to small firms because they simply can't afford it. The investment by the big firms has been so large that what they have to charge is a high value to get an adequate return on that investment. So there's so many small companies that they're nowhere near ready to start adopting all this technology. One, because they can't afford it. Two, as my large bank was telling me, we can't get the chips. We can't get the infrastructure to build all the data centers that we need right now. So we're still a ways away before this, as they say, pig works its way through the python. And so I don't think that those days are over yet, and they might not be anytime soon, simply because of an affordability issue, if you will.
Yeah, I mean, if you ask that question, then you have to ask the question: Is NVIDIA now a $25 trillion company as opposed to a $3 trillion company? They can't get the chip. There's only really one company that's actually making those chipsets as well. It's NVIDIA, right? I have to ask from a professional standpoint of an accountant, from you understanding the companies, is NVIDIA, what is going on? $4 trillion cap on a company. What the heck?
Yeah, it's been impressive to watch. I mean, I wish I bought stock in it back in like 2017 or whatever. But those aren't usually the sectors I pay attention to. No, I mean, it's obvious they're knocking the cover off the ball, and I don't want to use the word monopoly position or anything like that. But I mean, they have an incredibly strong position in their market. And at some point, you'd think there's going to be a competitor that comes in and creates a real threat. But so far, we just haven't seen it. And so it's not surprising that they, post the revenue and cash flow growth that they post every quarter.
Yeah, and I'm looking at Bitcoin right now, and when I asked the question, 109,872, we're almost back to 110 here. Are you looking at these companies and you look at the bigger companies in the Fortune 100 years in your case? Are they putting Bitcoin on their balance sheet?
Not really. Most of them know that. A lot of them don't want to touch it simply because they either don't understand it, or I'm going to say they think they understand it and they don't like what they see. Because remember, I mean, Bitcoin and stuff like that, it's not generating any actual cash, so it's really hard to value. It's a true, what do I think the next person is willing to pay for it kind of investment. And it's somewhat related, but just go with me on this story. So back in August, I'm in El Segundo. I'm sitting at a restaurant, and I'm sitting next to this husband and wife that works for a major shipping company. And where I'm going with this is blockchain. and everybody thought blockchain was going to be the greatest thing ever invented. And for me, I always thought, if this doesn't work in commercial shipping, I don't know where it works, because that would be the best industry.
Agreed.
And this company had just said, we've just gotten out of this. Like we replaced our old system with blockchain. Now we've gone back to our old system. And so I asked them, I asked this husband and wife, they were both high up. I said, why did you guys get rid of this? And they said, first of all, the lawyers asked us, when something goes wrong, who do we sue? Because who's ultimately responsible? You've democratized everything, so now nobody's technically responsible for this. And they said, second of all, you're never going to get all these countries to agree to the terms onto how to do things, especially when you're shipping things globally. And so I almost wonder if Bitcoin is similar, in the sense that, are you really going to get everybody to agree to the terms as to how whatever process this is supposed to replace is going to replace it? And I just don't see that happening.
That's very interesting, Kevin. I mean, I'm going to push back a little bit. On the blockchain side of it, I think the first thing you said out of your mouth was lawyers. So when I hear the word lawyer and I hear the word we don't like it because who are we going to sue? There's a purpose. That's to me already says, well, that's kind of the idea, right? The lawyers are only there to make money. Because if I'm thinking about it in the perspective, let's say, for example, the trade wars that we're having right now, and we're looking at food stuff coming out of Mexico or out of Guatemala, which we get a lot of apples and strawberries, Florida. I want to know where they came from, right? So the blockchain does that for me a lot better than just creates. I mean, what are you going to do? Go sue the company that moved the strawberries, or goes? But with blockchain, you know exactly where those things came from. I think that's the difference, right? Or am I missing something on that?
I mean, and now keep in mind, I'm not professing to be an expert on Bitcoin or blockchain. All I'm saying is the folks that I talked to at this company, that they were pretty high up. They were involved in these decisions. They said when our attorneys looked at it, and we looked at how we'd have to get adoption from other countries, it was not going to work. And so I was surprised last year I think it was last year when I read in the Wall Street Journal that they had actually dropped this, because I figured, man, if ocean liner shipping companies don't see the value here, I don't know who does. I mean, my father worked his whole career in logistics and supply chain, and so just from osmosis, I've kind of learned a little bit just about how that kind of works. And it was very odd to me when a large commercial shipper said, you know what, this really isn't any better than what we had before. And I just thought, man, everything I ever heard suggested that this was going to transform all industries, and then sure enough, we don't hear that much about it anymore.
Yeah, but I also heard the same thing about the internet when it first came out, that the internet's a fad, and look, I get it. It took decades for us to understand it. Most people weren't around, right? And you and I remember with dial-up, right? So when you look at the market as in general right now, and I look at the people that are coming into the markets right now, the zero DTEs trading, the meme coins, all of the to me the nuttiness that's going on. Is that a fad too, or is that something that will stick around for a little while?
Yeah, this is an interesting. I mean, as an investor, this is where I spend a reasonable amount of time thinking about this, because my genuine opinion of the market is that it's been a little frothy for a little while. I think a lot of people feel that way. And so as a value investor like myself, I'm always digging in various pockets of the market to find undervalued companies.
Right.
And it has gotten harder over the last couple of years, just because of the way the markets have appreciated. And, when you start talking about meme stocks and things like that, you always have these things that occur near the top of bull markets that just seem completely irrational, and have a funny way of sort of signaling whether or not we're near a peak. And I've been wondering for a while if that's what some of this stuff is, because the meme stock craze and whatnot, I mean, as a fundamental investor, it's just silly.
Right.
And so you're seeing gobs of money chasing ideas that don't have any fundamental value to them. That's where I get really nervous. And you
and I agree on that. I mean, I've been talking about it for a while. When I have a hard time finding alpha, there's usually something wrong. There's something out there that's not adding to it. And when people go, oh, well, there's all these buy the dips and we're going higher and the market's making new highs, that scares me. Like, I go, wait a minute. Now, about a few months ago, when the market started to pull back on all the tariff talk, I was like, that's capitulation. So it seems that there's this correlation right now with And to me, especially in the summer doldrums, as traders like ourselves call it, when you're looking at the markets and you got to think, okay, how am I going to price myself into the market going to December or whatever? It seems the markets are way overvalued and that there needs to be a pullback, but yet every single day we see this dip buying mentality. How do we change that dip buying mentality?
That is so to me, I always think back to 1999, which is when I started out. I was 17 years old. And I remember hearing similar conversations. How do we break out of this? And you really don't until there's a correction.
Yeah.
And you never see it coming. I mean, people just say, well, no, there doesn't seem to be anything fundamentally wrong. And it's like, yeah, but there'll be some outlier that comes in from left field and that'll just shake confidence. And then it's a domino effect. Right. Before you know it, the tide goes out and you realize, wow, there's a lot of people swimming without bathing suits on.
So you can say swimming naked. I mean, Warren Buffett said the same thing, right? It's his statement. I agree. Okay, we got about 4 minutes out of the open. Let's quickly look over here. 109.6 on Bitcoin. Apple now trading around 208.65 on the back of those comments from Peter Navarro. Looks like we're seeing a little bit of a selling here. Implied open here on the Dow. Up about 195 points. S&P fair value here down about 2 points. We'll see that happens. Bell at about 3 minutes 30 seconds now coming in. Advanced decline now positive by about 2,053 here. Tick now pretty fairly flat up 171. And then of course looking at my oil here, 67.76 now, down on the day as we talked about with yesterday with Scott Bauer saying he is still shorting oil. I agree with him on that. Silver now 36.40 now an ounce, as the gold now below the 33 handle here, firmly at 3,200 now. Kevin, you look at people that are hedging their bets against the markets. They're usually buying gold. Why is gold now slipping now?
That I honestly not something I've paid too much attention to. I wouldn't want to speculate on that one.
And do you see your as you say the firms that you're using, the Fortune 100s, are they buying alternative investments to hedge against their own portfolios?
Some do, some don't. It's a question of whether or not that's a part of their general strategy. I would say most don't, because I'm working with a lot of industrials and whatnot, and so I'm not seeing their CFOs and whatnot consider that as a major piece. I mean, they're hedging in some regards, traditional hedging. But whether or not it's alternative investments, I'd say it's probably relatively light for the companies I work with.
Yeah, you talk about industrials and that side of it. Copper yesterday, the comments out of the President Trump yesterday talking about he may tariff even copper coming into the States. Copper jumps 10%. Any of those companies you work with that's going to bother them?
To some degree, yeah. Just with some of the stuff that they're making, maybe a little bit. I mean, they're obviously hoping they can pass those price increases on. But yeah, I mean, it's a factor, but it's nothing that is a major part of their cost of goods sold. Let's put it that way.
Yeah, when people talk about them from the tariff side of things, I mean, the companies are not eating these tariffs. It's being passed on the consumer, and inflation goes right on up. And I think is this what there's this big tit for tat with Treasury Secretary Powell and Trump. Powell saying, look, if you're going to put these tariffs on, then expect inflation to stay sticky, and I can't lower rates for you.
Mm-hmm. Yep. Yeah, and the tariff argument is interesting. I mean, not to be political in one way or the other, just reaffirming what has been publicly said. The tariff argument is interesting because most economists will say, look, they don't work. And it seems that the current administration has a viewpoint of, well, if you raise them high enough, you'll force companies to start to come back and produce here in the U.S. And I can understand the argument behind that. It's just a question of whether or not it's going to work. No one's ever tried it, at least in any recent memory. And so the hard part is saying is, okay, I kind of understand where you're going here, but are the results going to be what you think they're going to be? And that obviously is what's leading to all the uncertainty in the market.
Yeah, and uncertainty, and we got about 30 seconds now to the open here, but uncertainty between mommy and daddy, Trump and Elon Musk. What's going on there?
That's also $1 million question. I mean, I was really surprised, I guess, when Elon left just Doge and all that other stuff. And obviously now is, I was reading he's trying to start his own party and all this other stuff. So clearly a major falling out. It would have been interesting to be in the Oval Office when those arguments were going on, just because, obviously 6-7 months ago they seemed like best friends, and now Elon is on the outs, so to speak. So that is a very interesting aspect that I don't know how the market's viewing it, but it's certainly having an impact on Tesla given the stock price performance.
Of course, yeah. And Tesla now slipping here as tick now down about 28 as the market is now open. Nasdaq pushing higher here on the start of the open here now. 109.6 now on Bitcoin, so it's holding steady. No changes there. Looks like the VIX is still pulling back. The VXX in general, the early indicator there now 45.72 now. It was around the 50 handle there not too long ago. So the pullback in the VIX is as people start to feel a little more comfortable in the markets, and the advanced decline now positive by 3,500 here. So a good start to the morning here on this Wednesday. Kevin, if I'm gonna ask you, because that's what you do. You got any companies out there you're looking at that you like right now?
Yeah, so the last time we were here, just to reiterate, I think one of the first companies I mentioned was RTX, the defense contractor, and I think they were around 115 at the time. Yep. And it was right after their Q1 earnings came out, and they said there's going to be about an $850 million impact from tariffs they're going to try to offset. And the stock got crushed, and I said, this is just silly at the moment. So I got to pat myself on the back because I think they're up around 145 now.
We'll pull that chart up for you so you can see it there. Hopefully you can see it on the screen there for yourself as well. But yeah, 145.45 now. Well done. I mean, we did have that when they did the sell-off big did happen. There it was down here. We saw that, and you did call that to go. So well done. All right, then throw the next one at me then.
So the next one, say a similar industry, so aerospace in this case. So a company that makes cockpit printers, if you will, and has a pretty much dominant share in that market. It's a company called AstroNova. The ticker symbol is ALOT, so ALOT.
I like it.
They're trading around, I think, 1170 or something like that. Don't know what the open was. This is a very interesting story if you have a couple of minutes. So CEO Greg Woods took over in 2011, and over the last 11 years, the stock price has gone nowhere. It's gone down 35%. This is where Ask Aladdin Capital Management enters, an activist shareholder. And they have called out management and entered a proxy contest saying, look, you guys are not managing this business properly. And I'll give you an example. So within the last 15 months, AstroNova bought this company, MTEX, a Portuguese-based maker of printers and things like that for commercial markets. Think about if you want to print something on cardboard or wood or stuff like that. There's still markets for this, believe it or not. And they paid about $22 million for this business, and within about a year, they had to impair it by about $14 million. So just a horrendously bad acquisition. And so even though you have a company with a dominant market position and growing revenue, the earnings and cash flows have essentially gone nowhere. And it eventually got to the point where you had this tit for tat with the company and Ask Aladdin calling each other out publicly in a really interesting activist campaign. You normally don't get this level of detail whenever something like this goes on. But in public filings, this stuff is sitting out there. So Ask Aladdin started talking to former employees, current employees, customers, all this stuff, and saying, look, the research is not good. They're saying that you guys don't really know what you're doing in the marketplace. So very recently, ISS and Glass Lewis came out with reports saying, look, we agree with Ask Aladdin. The board should be completely turned over. Most of the C-suite should be turned over. And we believe Ask Aladdin's 5 nominees should be appointed to the board. And on June 30th, CEO Greg Woods resigned from the company and stepped down from the board. What's really interesting about this company, so like I said, 2 divisions, aerospace, which does about $12.5 million a year in EBITDA, and product identification, which is the commercial printer market, does about, I want to say about $12.7 million of EBITDA. And this is a company with about a $90 million market cap and $46 million in debt. So roughly $135 million enterprise value. If you use EBITDA multiples, low-end EBITDA multiples for aerospace and defense, let's say 11 times, and the high is somewhere around 18 times in recent transactions. If they sold off the aerospace division for 11 times EBITDA, you would be able to pay back all of the debt and receive as much cash as the current market cap, 90 million, and you'd still have the product identification business for free. And so that's one of the things that Ask Aladdin has pointed out, where they said, look, at $11.70, this thing is dirt cheap. And so it's a really interesting case study just in hostile, I don't want to say hostile takeover, because that's not what it is, but certainly a hostile proxy contest. And just a very cheap valuation for a company with a dominant position in its market. So that might be a fun one for people to research and see if they want to take the risk on that company turning itself around. What's interesting is they were supposed to have their annual shareholder meeting today to vote, but the current management team delayed that, and most likely because they knew they were going to lose big time. So that one's a fun one. That is, in my opinion, a very cheap company at the moment.
You talk about aerospace. We're just being asked right now from Ron Williams asking about HWM. Do you know about how Met Aerospace? Do you have thoughts on this?
I've heard of them, but I haven't looked at them.
Yeah. All right. Quickly moving over here, NVIDIA now. Pull up the 1 second chart at 163.93. That would make NVIDIA a $4 trillion company here. Do you expect them to go to it?
Ask me that again.
Do you expect NVIDIA to hit the $4 trillion handle here?
With the momentum, I almost wouldn't be surprised if they go through it and just keep going and go a little bit higher. I mean, as long as they keep posting the growth results that they're posting, it doesn't seem to be any reason that they wouldn't. And so, I mean, I've done a very cursory overview of NVIDIA. I haven't gone deep into analysis on them. But, I mean, they certainly generate strong free cash flow and things like that. So it's not as though this is a company that's generating profit, but not cash profit, if you will.
Right. They're just putting money back into R&D, correct?
Yeah. Yeah. A lot of money back into R&D. And of course, paying their employees with stock compensation and all that fun stuff, which you see on the statement of cash flow. So it's they're an interesting one. It seems to be like, is there going to be any competition that comes out and challenges them?
And I have to ask the same question about Amazon. I mean, you saw where Jeff Bezos talked about it, and I won't even ask about the question, but 666, the amount of money that he sold millions of dollars of his own stock, saying that he wants to sell $25 billion worth of his own stock. Amazon, is that a pressure on it or not?
It's hard to say. Peter Lynch wrote in One Up on Wall Street back in 1989, like a lot of times insider sales don't tell you all that much, because maybe the person is just funding their retirement, although $25 billion, that's one heck of a retirement. Or it could just be that, it's like, hey, I've built this whole company. I actually want to monetize some of this now. It doesn't necessarily mean that there's anything negative going on at the company. And of course, because it's Amazon, the success that they've had and continue to have, you'd like to give management the benefit of the doubt, obviously. But, maybe Jeff knows something that we don't, obviously, which wouldn't surprise me.
Looks like the Russell here is pushing higher too, as well as the Dow now up, S&P and NASDAQ all across the board. Everything is up this morning. But I guess the question is NVIDIA here. All right, I got about 20 minutes now until the top of the hour here. NVIDIA now 163.60 now. And you are welcome to trade if you need to trade, Kevin. So we trade here too, man. Don't feel like you don't need to trade. I will probably be. I'm looking at NVIDIA here, and I'm thinking I might need to buy some here.
I'll tell you, as a value investor, it gets challenging for me, just because when I look at their price to free cash flow 50 times and all that, 50 times cash flow and all that stuff. It's very interesting. Now, the hard part is, of course, what's the growth rate of those free cash flows? Because it doesn't necessarily matter the multiple you pay. If there's enough growth in whatever your denominator is, in this case, free cash flow, it could look cheap. I mean, this is investors have been writing about this for decades, where they said, I thought some company at 30 times earnings was far too expensive, and then I realized that the company grew its earnings for 30% for the next 5-10 years. And, that initial purchase price turned out to be dirt cheap. And so it's just, how fast can they continue to grow, which has always been some of my concern with some of these larger companies like that, because sooner or later, there's got to be competition that comes out and gives them a run for their money. And so not knowing much about that space, hard to tell, but obviously over the last 10 years.
And there it did it.
Just done an incredible job.
Just broke the $4 trillion handle, and I also did buy some too as well. Let's see if it if it continues to push on up at 163 and 163.85 is where I'm in at. We'll see if I can. I'll probably be buying some more. But I have NVIDIA chipsets all over my house. I have lots of computers, so I totally understand it. We were picking it up here on the show under back in the day, right around 105, right? And of course the run up here, and I like this move. So, all right. Anything else out there you want to talk about?
I can give you another company. They trade on the London Exchange, Venture Life Group.
Okay.
So this is a small cap. Their ticker symbol is VLG.L because it trades on the London.
Yep.
So what we're dealing with here is a company that's actually transitioning into a pure play consumer health company. So they manufacture their own products for like ear care and female menopause and all this other stuff. And they're really trying to focus on the do-it-yourself personal care market, if you will. And what they also used to do was create products or manufacture products for third parties. Well, they're getting out of the latter business. And so they're selling off their CDMO business. And what's interesting about this is a company that has done a very good job acquiring small brands that are kind of ignored by their parent and just sort of breathing new life into them and driving organic revenue and cash flow growth. But since they're selling their CDMO business, they are going to have a debt-free balance sheet. And just like AstroNova, they're actually going to have net cash on it. So they'll have about 33 million pounds of net cash on their balance sheet. They are expected to generate about 10 million pounds of EBITDA in 2027. And long story short, if you go through the math on this, you can easily come up with a stock price that's that's about double the current price, which I think is about 60 pence. Now, if you really want to have some fun with this, and you say, okay, over the next 3-4 years, they actually utilize that 33 million pounds for acquisitions and the 50 million pounds in their revolving credit facility, you get up to about 24 million pounds of EBITDA. And based on reasonable multiples, like 13, 14 times EBITDA, you have a stock that could trade upwards of about 200 pence, and it's trading at 60 pence today.
Mm-hmm. Yeah, and I that's a good question to ask. I mean, it seems that mergers and acquisitions are the hot thing right now. I talked about this about 6 months ago, that as this new administration comes in, we're going to have mergers and acquisitions. Are they at the level that you thought that they'd be at? When you looked at these major Fortune 100 companies, are they going after and are they actually doing it? Are they actually buying other companies now?
You know, on the Fortune 100 side, over the last 2 years, I'd say since interest rates spiked, it's slowed down a little bit. What you haven't seen slow down is more at the mid cap and the small cap range. The deal volume just has kept going. And so with Venture Life, they're very small cap, so they have plenty of opportunity. At the larger side, which is what gets all the media attention, that one's been a little bit more volatile. And I mean, rightly so. You see interest rates obviously double or in some cases triple over the last 3 years. I mean, it's going to have an impact.
Yeah, but with not having that much cash, right? And these companies like NVIDIA that are putting their money back into R&D, and they're not putting it into mergers and acquisitions. Is that a problem too? Because rates high, it's hard to borrow money to be able to do the M&As, right, for them?
So it depends on the company, but for a company like NVIDIA, given the way how well they've done with innovation, I love to see them plowing it back into R&D instead of possibly overpaying for an acquisition. I mean, this gets back to Warren Buffett just talking about the importance of proper capital allocation. And so if you have a company like, traditionally Amazon that's innovated very well, NVIDIA, I would much rather their CEOs be investing internally in that organic growth instead of going out and buying it.
Right. Okay, then asking that question, I think the $1 trillion elephant in the room, Warren Buffett, is he out there elephant hunting right now?
I mean, he probably still is, but as you know, he's stepping down from the CEO role at the end of the year. He's always been elephant hunting. It's just with what is it, like 300 billion in cash or whatever he has. I think that's the right number. I hope it's not wrong. I mean, that is a major acquisition. It's very hard to find something that would be selling at a reasonable price with good growth prospects, which is why he's had such a hard time deploying that capital.
Right.
But I'm sure him and his two managers, I'm trying to remember their name right now, are certainly always on the hunt looking.
Yeah, Alan Jane is definitely I think he's taken but he's taken the company in a different direction, a little more tech than he had in the past. I mean,
Yeah.
Buffett always says, I don't invest in things I don't understand, and then he buys Apple at the beginning, right? All right.
Yeah.
Okay, we got about 15 minutes now to the top of the hour. I'm seeing, of course, NVIDIA making some of the news headlines now. NVIDIA becoming the first company to $4 trillion, and we're taking off here a little bit. As I did make that play earlier, I'm going to take a little bit of that profit off. If you don't mind, I'm going to do it for those of you I went pretty heavy on NVIDIA there, so I'm going to sell my NVIDIA here, probably sell all of the shares. Put a limit order in coming up here. I'm liking this. I'm liking this move here to the upside, and that's what usually happens when you see companies that make this kind of move, breakout move, that usually continues to go right on up. All right, let's get to it. All right, let's change the subject just a wee bit here. I'm going to talk to you a little bit about interest rates in general. When you talk about in the political side of this, we heard from Michael Litt, big short fame. Trump is now saying that he wants to replace Powell. Is that kind of talk making these bigger companies nervous?
I mean, I always wonder. I mean, sometimes I think it does. Sometimes I think it doesn't. It's like anything else. What I hear most is the hard part with the current administration is just the uncertainty. In a lot of ways, we don't know what's going to happen from 1 week to the next or 1 month to the next. And I mean, companies have come out and said this publicly. So I think that's the general gist of it, is not necessarily who they're going to put in there. And it's not necessarily that Powell has done a bad job or anything like that. I mean, that's obviously open for interpretation. But it's just, I think a lot of companies wish that there was a little bit more stability. Again, Barron's, the Wall Street Journal, I know they've reported on this with regard to tariffs, that it's just been very hard to keep up with policies. And then ultimately the procurement teams, right, the buying teams are sitting there saying, well, we don't know what we're going to have to pay this week versus next, depending on what the tariff rates are, because you have to monitor all of that in real time. And so when you're changing the Fed chair around and whatnot, it makes it as equally hard, because now it's like, okay, well, we were going to invest in this piece of equipment or plant or whatever it is. We thought the rates were going to be stable. Now they might not be.
Mm-hmm. Yeah.
And so it really changes firms' capital, or it alters firms' capital allocation decisions.
Yeah. Do you think Powell will be replaced by? I mean, it looks like Kevin Warsh. If it's not, there's a few other names out there, but it seems like the name that's been bantered around the most.
It's just a guess on my part.
Okay.
I mean, I would think, just based on the comments the president has made over time, that he would replace him. But you just never know. You never know how much of it is real and how much of it is just part of negotiating tactic.
I mean, look. I mean, we're okay. Here we are, 164.40 hit. I do have a limit order in to sell here in just a wee bit here. So if those of you keeping playing at home with me, I'm just about there, Kevin. So I'm happy camper here.
There you go.
But, it's a little bit of slip there, but okay. Well, there you go. Jim Cramer is now talking about NVIDIA now on CNBC. So there you go. All right. Okay. So we are seeing the inventation of different types of trading. And I think one of the questions I would ask you about is the zero DTEs. The options market's pretty heavy now. You are also a professor, correct?
Yes.
Yeah. So are you seeing these quote kids these days? Are they also trading like the craziness? Are you seeing that in the classroom?
Yeah, it's funny you mention that, because one of the classes I run, it gives me an opportunity to walk around a lot and just sort of see what students are doing. And a couple of years ago, particularly, they all had their screens open, and it was just Bitcoin, and then meme stocks, and then it died out a little bit. But recently it's come back. I've noticed it within the last 6 months or whatnot, that I've seen a lot of, especially even freshmen, which I'm surprised. They're into it quite a bit. And as a value guy who takes his time, it makes me cringe, because all I think is, you guys have no idea what you're doing. But it's come back with a vengeance in some regard.
Yeah. When you look at those, I don't want to say kids these days, it makes you feel old, but When you, as a professor, looking at them, how do you handle that with them? Do you go, look, explain? I think one of the things that Howard Greenberg on our show here that does crypto, he would always ask somebody who would get into a meme coin or whatever. He'd say, okay, well, what does that coin do? Right? What does this company do?
Yep.
You can't answer that question. Oh, well, they have a funny meme, and that's why I invest in it. I mean, that's got to be cringeworthy. And then they tell you I made $1 million in it, right? How do we teach them? How do we educate them in a way going, hey, look, this is great to do this, but do you feel like it's gambling, or do you feel like they're really investing and they're actually learning about things?
Oh, I usually flat out tell them, unless you could tell me what the company does in about 60 seconds, it's the old Peter Lynch test. Unless you could tell me what a company does in about 60 seconds, you're gambling. And there's always a story or two of somebody who made a good return, this and that. But I got to give a lot of the kids credit. They'll openly say like, yeah, I started out and I made, whatever, $5,000, $10,000 doing X, Y, and Z. And then I lost it all 6 months later. And I just look at them and I said, you know how many times I've heard that story over the last 25 years?
Yeah.
And what I do in my classes, so maybe I'm very different in the way that I teach, but it's not just accounting for accounting's sake. To me, it's always more finance, and it's very applied. And so I love to give them examples of investments I've made that have been successful, not unsuccessful, and why. And that's where they really start to learn, because deep down, I think a lot of these people know, it can't be this easy. Nothing in life that's worth anything is usually that easy. And that's when they start to realize, I'm here. I actually want to start to learn some things. And so it takes time, but a lot of them, they do start to pick it up and get really interested in learning how to do this correctly, if you will, over time. It's just whenever I see a new 18-year-old walk in the fall semester and I do all this trading, blah, 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 I just sit there and think, oh boy.
Yeah. I'm not going to get your attention through class. You're going to be sitting there on your phone the whole time, right? Do you let them talk at class? Do you let them explain their positions of why they're doing the things?
Always, because to me, that's part of it. Because since I teach financial statement analysis, I always tell them, guys, what I want you to do is tell me about your position, because if you're able to, that means you've actually thought about it. And if you can't articulate it, then you haven't thought about it. And that's where there's usually one or two students in the room that you can tell put in the time, and that really tends to draw everybody else in and say, oh, I really don't know as much as that person sitting over there, or I don't know as much as my professor, and I better be careful. Because I always like to tell them, look, I was a football player. So I say, guys, if you come out of high school, if you've never played football in your life, would you just walk onto the field? No, you're going to get killed. I said, so why are you doing that with trading? Why are you trying to go up against Goldman supercomputer without learning first what you need to do?
Right.
And that tends to get them, because it's like, look, man, I wouldn't walk out against our D1 defensive lineman right now. I'm going to get killed.
And those of us who played football and baseball in high school and college, I totally understand. Okay, so let's talk about it from the next perspective of that. Then, as these kids are learning about the markets, is there a specific area that they like the most about the markets?
I wouldn't say necessarily a specific area that I've seen. It varies. What I've really seen is the topic, and everybody loves the topic of valuation, because it always seems to be like a black box to people at first. How to properly value a company. And then when I tell them, look, what you use in one industry might not apply to another. Like with NVIDIA, a discounted cash flow will work pretty well, but you can't do that in property casualty insurance or banking. It just doesn't lend itself to that kind of thing. So once I start teaching them valuation and how the market tends to think about things in some regards, that really tends to hook them. And what I love to do is not trick them, but in a way talk to them about certain companies where I know there's the reported numbers do not properly reflect reality. And then they say, and sometimes these are pretty popular companies, and I say, if you look at this company, they're saying they're making $500 million a year. They're really only making 300. So what should the valuation be?
Right.
And that's when they say, oh my God, I know someone who's invested in that company. And I said, yeah, what looked fair valued is now overvalued.
And when you look at valuation of companies, what ratios do you look at? PE ratios, PEG ratios? What ratios do you look at?
Yeah, I mean, the main ones that there's a couple of, so PE ratios, enterprise value to EBITDA, particularly if a company has a lot of debt, free cash flow yields, price to free cash flow, I would say are the main four. And of course, you do a discounted cash flow. Unless it's financial services, then it might be more about like a price to book value, things like that. But that tends to be where I am, where I tend to really get the kids interested, or just my clients through my website, is when I show them, look, I know they're saying the free cash flow is 500 million, but it's not. You got to make adjustments for certain things. And after you do that, you realize, oh, it's very different than what GAAP says it is. It's just under accounting standards.
Hmm. And do you do GAAP versus non-GAAP?
Always. And in my professional opinion, a good analyst absolutely has to be doing that. And let me be clear, when we say non-GAAP, I don't mean the non-GAAP numbers that the company reports, because they're all doing that now.
Right.
There's other adjustments you might have to make for stock-based compensation, leases, and all this other fun stuff, pensions, that would show a very different story from what even the company's non-GAAP numbers would show.
Yeah. Okay. So we're seeing now President Trump once again reiterating that they could see a federal takeover of New York City and Washington, D.C., according to ABC News. It just came out here a little bit, once again saying that. I'll post it up there for you. I had Ron Williams telling you thank you for all the commentation this morning, Kevin. We really enjoyed hearing from you this morning.
No, but truly my pleasure to be here. This is always fun. You ask really good questions, and it makes me think. So I gotta stay on my toes when I'm with you.
I look, when I talk about the markets, I don't do, as everybody knows, I don't do gotcha questions. I try to make, because I think one of the problems in social media is that the people that really don't know are the ones that are in social media. All right. Just because you got 1 million followers doesn't mean that you understand the markets. And it's always good to bring people like Kevin that are the front lines, that are in the schools, that are actually doing the work, and not just a talking head on a TV show. So I appreciate you coming on the show today. And we're about 4 minutes away. You got any thoughts before we let you go?
No, so I've shared my 2 most recent ideas with you. The only thing I'll say is they're on my website, Astronova. There's a free analysis on my website. So if you want to see the deep dive on everything, feel free to check it out. Other than that, I try to keep doing a deep dive every month and teach my subscribers something and hopefully give them ideas that are worth considering for their own portfolios.
Yeah, and if you don't out there, do yourself a favor and go click on caecoach.org. Give Kevin a shout. Go give him a follow. Go say hi. He is a professor, so he does know. He is on the front line of what the millennials and I don't even know what they are. The XYZs are being called today.
Gen Z now. We're waiting for Gen Alpha next.
It'll be Gen PB next. I don't even know anymore. But what's interesting is, I do want to know what they're thinking, right? Because they are the ones that are going to be watching out for us as we get older, right? And, I don't want them to lose all their money. I want them to be thinking about how to be educated about the financial markets, because the markets do move. But I will say that the movement of the markets seem to be much faster than ever before in history. And it seems that they are keeping up with it, at least in the trends. So, yeah. All right, I got about 2 minutes down to the top of the hour as we close out here. My quick thoughts on the markets. I think that the markets are slowing down a little bit. The obviously Federal Reserve is on the forefront. We have a lot of Fed speakers over the next few days. They can't help themselves. They just have to talk, just like us, Kevin. But the difference is they move the markets. And I think that we have to keep our eyes pretty tight on that, especially with the valuations that we're talking today, the valuations of these companies that Kevin is talking about. One of the tickers talked about this morning was ALOT, a lot. He likes it a lot. And I like that pun. We'll keep that pun going. But I appreciate Kevin. I appreciate you being on the show. And we'll close out here now. And we'll see everybody back here a little bit later. I got others on the show today. But Kevin, we look forward to seeing you once again on the show.
Thank you very much for having me, Steve. Look forward to being back.